So I'm going to welcome to the stage the panelists for this particular discussion. And the first speaker, if you can just follow each other's cue as I announce you and then get onto stage and then pick a seat, is Onyebuchi Memeh. He's the head of trade in South Africa and Southern Africa for transaction banking at Standard Chartered Bank. He's followed by Prieur du Plessis. He's the chief investment officer at Barak. And then we have Robert Besseling, founder and chief executive at Pangea-Risk, and Bridgett Majola, director and partner for banking finance at CMS RM Partners. And of course, Hlengiwe Makhathini, head of corporate finance at Transnet. Thank you, everyone, for joining this particular discussion. And I'm sure it's going to be quite robust and interesting, seeing that we had I would argue some polarizing views with the previous panel, depending if you were in the audience and you caught a little bit on that. And I see Memeh smiling, which means he did catch a little bit of what was discussed before. So there's so much happening in South Africa from a growth point of view. And you may have noticed as well from a power restriction point of view, we are back load shedding. And South Africa is in quite an interesting yet tricky place. There's a lot going for the country, yet at the same time, it's trying to find its way back to pre-pandemic levels. Yet it's also having a point where there are some, call it green shoots. And the whole point of this conversation is that how do we then take those green shoots and I suppose change the narrative in order for us to be able to take advantage of what is happening from a trade perspective and also what's happening globally right now as we are seeing with the Ukraine-Russia tensions. Before we get started into this particular conversation, we are going to put that poll on screen for you in order for you to participate. If you could just get the poll running. And again, this gives us a sense in terms of how you're thinking about certain issues around the country and various topics as well. So if we can just get that poll on screen for the audience to see. Right, so we'll have the poll up in the next couple of minutes, but we're just going to kick the conversation off, and starting with you, Priya. I mean, as I alluded to, South Africa is trying to find itself, I suppose, out of the pandemic, and I suppose we're still in the pandemic. From your assessment, how were large corporates thinking about the country, I suppose, as the global economy, again, navigates its way out of what we find ourselves in? How are corporates thinking about the country?
Yeah, I think, as you sort of alluded to before, it's that tricky situation that you sort of coming out of the pandemic and then every time maybe something else is happening. I think from a large corporate point of view, what definitely is sort of helping us from a sort of South Africa point of view is, and large corporates you'll see is taking benefit of that, is the sharp increases in underlying commodity and resource prices. I think you guys sort of all notice we're paying a lot more for sort of the petrol and things like that. That's obviously got a knock-on impact on sort of other sort of industries and things like that, and will push through to maybe agricultural production in terms of that. So from a large corporate point of view, you're looking at guys that sort of and a lot of the mining and mineral spaces traditionally that had quite a lot of sort of pressures going on before, doing very well in terms of that space. I think also linking to that, and again, that's what we're also seeing from a large corporate spaces, and again, from a South Africa point of view, is you've seen a lot of development also to that trade side and the fintech side, which is becoming such a sort of important sort of link to channel everything sort of digitally. How can you get sort of better payment sort of structures built up and play? And I think that's what I think a lot of corporates is looking to sort of, how can they sort of link almost your traditional sort of trade side with digital sort of fintech technologies, and therefore sort of increasing the efficiency and specifically exports and imports. I think, unfortunately, like you all have been seeing, is the COVID has caused quite a bit of delays and a lot of the logistical supply chains. And from a corporate point of view, there's a lot of focus to say how can they sort of address those problems and enhance that to take advantage suddenly of the massive sort of opportunity that currently exists in the market. So I think that's sort of the main sort of focus area and trends that we see some of the corporates coming in. I think they've been very quiet, and a lot of them have been sitting and almost waiting for this opportunity again to come across. And I think that's where specifically South Africa, which got quite a broad economy, and I think also the opening sort of remarks this morning is, you know, the sort of a diversification of the economy, and you see South Africa specifically in the trade to the Asian side, China specifically, is a key driver for a lot of corporates to say, how do we sort of enhance that and get benefit from that coming through.
Bridgett, you come from the banking and financing side. I mean, are you seeing things the same way that Prieur is also seeing things?
Yeah, I mean, I think it is quite similar in the sense that we're also seeing not a lot of debt going into expansion. There's not a lot of capital investment that's going in. Large corporates are sort of in what I would call a nervous condition, where there is a sort of hesitation to expand, and concerns obviously around some of the uncertainties around what's going to happen with the ANC, with the elections coming up. What's going to happen with Eskom, what's going to happen with the energy, and obviously the recent rhetoric that is a little bit concerning for some of the corporates. So people are sort of just hanging tight and not making any sudden moves. And then you juxtaposition that with the international sort of demand from internationals who obviously see opportunities in South Africa and want to invest and are offering money to the corporates in South Africa for expansion and growth, and sort of ESG related financing that we're also seeing with the energy transition, particularly with the mining companies, but also just sort of holding back a little bit in terms of aggressive growth. And of course the war with Russia doesn't help with the concerns.
And that is that poll that I did mention. If you've just walked in a little bit later into the room, you can participate in that poll. And it's going to be quite interesting in terms of how you vote, because we're going to unpack those particular results in terms of our assessment, and we'll have that discussion with the team at Pangea about how you vote in this one. So the question reads, what should reforms in South Africa focus on most urgently? And those are the options on your screen, either restructuring, other state-owned enterprises, is it debt sustainability, should we be focusing on budget reform, or is there another aspect that we've missed out in terms of this conversation as it relates to South Africa? Those are the options right there. And Robert, I want to come to you here because I'm curious in terms of Pangea's risk rating. Where does South Africa sit, especially after the July unrest that we saw last year?
Thank you, Nastassia. Good morning, everyone. This is obviously the South Africa promotion panel. We just have to hope that Eskom keeps the lights on for the next 40 minutes or so. Otherwise, I know exactly what that poll is going to do. If you just landed in Cape Town, you may be looking at what, stage 4 load shedding, maybe 6. We're talking about panic buying of fuel in northern cities last week because of, the Bridgett said, and the Prieur also pointed out, rising fuel prices. There's a lot of concern at the moment. But at the same time, there's a lot of good news too. South Africa has one of the most resilient emerging market currencies in the world at the moment. It's no longer that bellwether for emerging market risk. We're actually seeing, over the past few days, we've seen a real investor entry into the stock markets here, into sovereign bond buying, and we even woke up to the headlines today that first quarter business confidence is back up based on the RMB business confidence monitor. So there's a lot of different information out there. So Nastassia, I mean, obviously Eskom is crucial, particularly if fuel prices rise, then we're going to be paying diesel generators to keep the power on in this country at current prices of over $120 per barrel. We are a lot more optimistic about South Africa than, let's say, 12 months ago, despite some of the ongoing concerns. I'd say in the longer term, South Africa stands to benefit, particularly its mining sector, from the focus on palladium and platinum for electric vehicles and for semiconductors. That's, of course, that's the next industrial revolution, will be driven by those two components. The other major exporter of those two metals is Russia. So South Africa really stands to benefit. And I think maybe a final point also there is that Europe and other markets around the world, including Asian markets, will be looking for diversification of natural gas. And South Africa has had a number of opportunities over the past few years to tap into gas potential. Where you stand from an ESG potential standpoint there, of course, is quite relevant to this conversation. But there is an opportunity for South Africa to tap into its natural gas potential on top of its booming mining sector. So we're a lot more optimistic than a year ago. There's some actual opportunities on the back of these crises going on elsewhere in the world.
All right, and those were the results that people voted. It's a split one, Eskom restructuring debt sustainability. So we'll come back to this one. We're going to bank these results for now. Memeh, let me come to you. I mean, as Robert alluded to, the whole point of this conversation is, of course, to be positive, but yet also realistic about what is happening on the ground. But I'm curious from your perspective, what themes do you believe that South Africa can tap into, especially from a trade finance point of view and sort of the sector that you're playing in?
Okay, thank you, Nastassia. Let me introduce myself specifically before I start answering these questions. My name is Onyebuchi Memeh. I'm the head of trade for South Africa and Southern Africa. I work for StanChart, and we are present in 14 on-the-ground presence. We have on-the-ground presence in 14 countries in Africa, and one of them we recently moved into was Angola, where we are perhaps the only international bank. This is just to clarify the point made in the first channel about StanChart being here and there. Just needed to get that out of the way. Very important, we are one of the the top trade bank, say the top three trade banks globally. And so I'm in a good position to tell you about what we are seeing in terms of the key themes emerging and pointing to the future of trade. We actually did commission PricewaterhouseCoopers in Singapore, who looked at historical data and projected into 2030, as well as carried out a survey of senior leaders of top 500 companies to arrive at this conclusion. So we see where trade is heading to, and I'll pick three of them to see how South Africa can tap in. The first one, 5 key trends. The first one is wider adoption of sustainable and fair trade practices. The second one is on great diversifying risk. The third one is digitalization, then acceleration into growth markets. I want to pick the first one on sustainability because it was discussed in the first panel. I want to mention that it's important that we look at it as a business opportunity, as a commercial opportunity. We cannot fix governance simply by saying so. The second point is that we can do more than one thing at the same time. The third one is, when you think of the sun, which continent do you think about? It's Africa. Robert had just alluded to minerals such as platinum, which will impact the growth of electric vehicle industry. And that's an opportunity for South Africa. Let me use South Africa as another example. Do you know that 2/3 of electric vehicles that we manufacture, for instance, is being exported to countries like UK and Europe, which have already put in place carbon emission thresholds and regulations around electric vehicle? It means that we must adopt sustainable practices and transit aggressively if that industry is not to suffer. What about energy? Look at the recent poll that was conducted, Eskom restructuring. If we adopt, or rather if Eskom does the right thing by bringing an energy mix that includes renewables, especially look at the environment that we have in South Africa that's very conducive to solar energy. If Excom does that, it can stabilize supply and create sustainable supply of electricity. And then the other point I wanted to make is on growth. And I think Robert alluded to that as well, importance of putting in place policies that will create the necessary policy reforms that will accelerate growth. Trade is moving to high growth markets. If you see the list of companies, or rather this list of countries that are driving trade today, they have annual growth in excess of 7%. So it's very important that we incorporate, or rather recognize, I recognize the tension between social spending and then spending on growth. But spending on growth is much more sustainable because it will create the jobs that are necessary. And when we come back to this sustainable issue, you find that the economy itself, sustainability helps the economy. And the economy itself, countries that are much more affluent are in better position to put in place much more sustainable social constructs as well as social order. And that's why I feel that we have a great opportunity here. And if we look at these key trends driving trade, I think South Africa has a great deal of opportunity to tap in and improve its fortunes.
Yeah. So, which is quite interesting because, as I mentioned when I was introducing the panel onto stage, you may have heard the last person that I introduced was, of course, Hlengiwe Makhathini, who is the head of corporate finance at Transnet. So we can't talk exporting, we can't talk taking advantage of the commodity complex that was playing out here and how it benefits South Africa without talking about what is happening with Transnet. So let's take it a step back here, and I'm curious to find out from your point of view, Hlengiwe, what is the, call it the investment backlog across the freight logistics point of view in South Africa? And also, where do you see private sector and Transnet working together to sort out those backlogs?
Thank you, Nastassia, for that question. So, I mean, as you are correctly saying, Transnet is literally at the heart of trade in South Africa because exporters need our ports, they need our rail system. Importers also need our ports, and we try to accommodate them through our rail system. But you will all know that our container corridor needs a lot of working on. So at Transnet, what the current backlog in terms of investments, just to maintain, refurbish and expand our current rail and ports network, we need close to 136 billion over 7 years. And just on the rail infrastructure alone, that is about 65 billion rand. So it's a lot of money, and we all understand the current limitations that we also have. That is why then, we are working very hard in implementing the private sector partnership strategy, because I think what we've been doing for a long time is try to be everything to everyone on our own. And we are realizing now that we actually do need to partner with the private sector to rope in the efficiencies that we are hoping, they will bring into the partnership, and also to tap into their capital base to make sure that we don't try on our own to raise the funding that we require. But just to the issue of, confidence in what Transnet is delivering, I mean, engaging with most financial institutions, we can see that there is a lot of buy-in into trying to turn Transnet around. And we are currently running 2 private sector partnership opportunities, which we can see that there is appetite, from great international players to come and partner with us and help us to position, especially our Durban port, as the hub for the Southern Hemisphere.
You spoke about infrastructure, and I saw Bridgett nodding there, and I'm curious from your point of view, Bridgett, the kind of key instruments that should be deployed to support, government's strategy of placing infrastructure at the heart of economic reconstruction and its recovery plan.
Yeah, I mean, I think Hlengiwe was alluding to it. In fact, I think what we've seen in the South African market that's worked really well for some of the SOEs is definitely the PPPs. So partnering with the private sector to assist. I think also blended finance can also be quite helpful. And I guess maybe some lessons around what other countries are doing internationally in terms of innovating around the type of financial instruments that you can have and how you can play around with the risk matrix in order to make sure that you don't have what we've, I mean, without being controversial, seen in South Africa, which is like a lot of white elephants, when the balance between the finances and the risk allocation isn't correct. And so there's no one taking responsibility for that particular infrastructure piece and paying for it.
Where is the greatest economic activity in South Africa, and which sectors do you believe have the, I suppose, the growth potential going forward?
Yeah, I think in terms of the, the panelists also mentioning quite a few of those. So currently is obviously in the palladium and electric cars, as Robert and Stan Charles mentioned, is I think from a, if you look at the new economy, that's a growth area. Russia is a big supplier. That's again playing to our advantage. So it is actually to look at those opportunities and really sort of make it count this time. I think it's not the first time we've seen some sort of maybe commodity boom and spike and a super cycle. So that's definitely one of the areas that mineral and mining side remains as sort of a strong focus. I think as everybody also touched from an industry point of view is, and again that was the polling question as well, and is linked to sort of a lot of the state-owned enterprises and the Eskom and the debt, which is all interrelated actually, is if you look at those sort of from an opportunity set point of view, is you need all those enterprises and public partnerships to work together to get sort of that economies of scale going and really make an impact. Otherwise, I think it's just a sort of a discussion. So I think that policies, as was mentioned, to get it into place and start doing it is for us as very key. I think another thing that's also people sometimes forget about it is, again, specifically if the prices are flying up, is the agricultural and food security. I think, and again, we touch on ESG and on those type of sort of points. It is sort of Africa, and South Africa has been sort of a leading agricultural producer. And again, touching a little bit of Ukraine being a massive wheat producer. South Africa is also quite a big wheat producer. And in terms of other agricultural products, we've been diversifying quite a lot into sort of more niche products that go to a lot of the European markets, Asian markets, and those things. So I think from a point of view, you look at obviously clearly in a shorter term, you got the massive increase in the underlying sort of minerals mining, the metal side. We're looking at a lot of processing of those and getting that secondary market going, not just to take the parole products out. But I think the one that I think people always get back to, and again, as soon as sort of food prices, the inflation is picking up, is food security. It's been always a key sort of concept for Africa and for the world, and for South Africa being sort of a bread basket. That's also one area. But again, just not only sort of producing the product, but also getting to the secondary sort of processing side of all that. So I think in that trade side, it is currently sort of linked to that, they call it new electric market, sustainability, the solar, all these things got mentioned. But again, the solar and the alternative energy links to the big agricultural projects to make that sort of work. So I think that's what I see sort of the opportunities now sort of in the short to medium term.
Robert, I'm going to come to you for this one. A little bit earlier on, in that conversation with Memeh, where he was touching on, I suppose, the themes that South Africa can tap into based on what he's seeing from a trade and finance point of view. We just had that poll where we were asking the audience in terms of what we should be focusing on. It was a split between Eskom and, dealing with the debt aspect. And Memeh also mentioned an interesting point that we can focus on more than one thing. But now the question is, it feels like from an investor point of view, South Africa does a lot of talking. We throw darts at a lot of walls. But what is sticking and what isn't sticking for somebody who's probably sitting in this room, wants to place a call back at his corporate office and say, we're going into South Africa. How do we interpret that poll in the whole idea and the narrative of driving investment for South Africa, bringing the attention to South Africa?
Thanks, Nastassia. Tech team, could we put that the poll results back on the screen, please? Prieur's already pointed out, the poll's rigged. I wrote it just before the session, and it's rigged. There's only one real problem with South Africa, and that's Eskom and Eskom's debt. And everyone who's voted for those two has probably also noted that, first of all, the two are interrelated, just like Prieur noted, but also that's the first port of call. That's the first area that needs to be addressed. The government has come out 4 years ago already talking about Eskom restructuring. And Memeh also said you can't fix a country by just talking about it. This government has now started the restructuring of Eskom. However, there is a lot to do still. There is the question mark in terms of making Eskom profitable, how to deal with the ballooning debt, and then also the climate adaptation. Western countries and multilaterals just gave South Africa $8.5 billion to play with. We don't even know what it's going to be spent on yet. The World Bank is now asking for the decommissioning of coal-fired power stations to be funded with that 8.5 billion. In fact, what the government here wants to do is actually to drive a green energy transition. Absolutely crucial. This is potentially the biggest economy in the world where this can actually be done successfully. Beyond this size, like Brazil or India, those countries are just too big. It can't be financed on that level. Much of this financing is coming in on a grant level or a cheap concessional level. So this is potentially the most interesting transition. There's people pointing above us. I just want to make sure everything is safe. Fine? Okay. If anyone sees something, please shout. So I think Eskom is the absolutely most crucial aspect here, Nastassia. I think one quick point to make is that this is an election year. Not national election, but this is an ANC party leadership election year. So there's going to be a lot of rhetoric, and there's going to be quite a little action on this. But this government is a reformist government, and it is seeing Eskom as an absolute priority. If the elections go the way that the government wants it to go, then we can see more action on Eskom restructuring and other reformist issues from next year onwards.
I saw a very interesting article, and I'm not sure if the audience saw it as well, on News 24, coming out about a couple of hours ago. And the headline reads, South Africa wants a single African currency to boost intra-continental trade. So we can't talk about that whole idea and how that might plan out without talking about AfTA or AfCFTA. Memeh, your early assessment of it, and also, I suppose, South Africa's participation.
Yeah, thank you for that, because I don't think we could go through this entire discussion without bringing in the African Continental Free Trade Area Agreement. It's a big deal. We are talking about a pact to integrate a population of 1.2 billion people and potentially aggregate a GDP of 3 trillion. So that's really a big deal. So it's really about creating a single market to deepen economic integration. So I'd like to do a quick chronology of what has happened. 5 years of discussion translated into the agreement being signed in March 2018, and then the agreement being enforced in 2019 after some phase 1 discussions or negotiations. And then the first free trading occurred on 1st January 2021. And it was, for those of you who have been following the trend, this was by an alcoholic manufacturing company in Ghana, airlifting a container load into South Africa. Now, I would have wished that the first product was not alcohol, at least for my kids. Just joking. But it does show that trading has commenced. Now, this EFTCA, it's very important I say this, divided into 3 phases of negotiations. The first one being negotiations on trading in goods and services, as well as settlement of disputes. In that's the one that led to the ratification of the agreements, in 2019. But then there are certain negotiations which I'll come to that still need to be trashed out. Then the second one is around intellectual property rights, investment and competition policy. The third one is about e-commerce. Now, back to phase one. The idea was, to eliminate 90% of tariff lines within the first 5 years. And then we have this accommodation for the least developed countries to allow them to do that for the next 10 years. And then we have this 7% called the sensitive goods, where you're expected to phase out over 10 years. And then you have a 3% exclusion list where liberalization will not apply, but the idea is that we cannot go above 10% of intra-African trade, okay? Now, if you look at, I think from my perspective, my assessment, it is going well, but I think the pace and content needs to be improved. For instance, I think phase 2 and phase 3 should go together, should be simultaneously negotiated. If you are talking about phase 3, which is e-commerce, it is highly needed at this point because I think it should be front-loaded. We should be talking about digitalization in Africa because we have the opportunity to digitally connect the continent, because that will boost not only connectivity, investments in infrastructure, digital infrastructure, skills, as well as cross-border connectivity as well. And then the regulations around things like data privacy and governance, which is important for cloud computing. I don't know, many of you have been involved in that. Cloud computing is very important in Africa because it frees up capacity. Research as well as commercialization of things like AI and blockchain require a lot of capacity for computing systems as well as speed. And so that's where I think that we should be, what we should be looking at. For South Africa in particular, if you paid attention to The Economist, they have a 32% share of export trade in Africa already. So it is in a good position. South Africa was one of the first to put in place a customs infrastructure. Only themselves, Ghana and perhaps Egypt, these are the first three to put in place a customs infrastructure. So it's in a very good position to ride on the AFCA in order to make, or rather to improve its economy.
We've got about 4 minutes left for this particular panel discussion before the next one comes in. And we've got a question that's actually come through from those who are watching this virtually. And I'm not sure which one of the panelists wants to take this one, but I'm going to read it out. The question says, how much of a threat to growth is global bank de-risking, and to what extent have local banks had to tighten their compliance and due to diligence controls as a result? Has this in turn made it harder for businesses and SMEs in particular to access bank finance? Who wants to take that one? Or should I pick a victim? Prieur, do you want to do it?
So maybe I'm not the bank guy to take that question, but I'll take it from the SME side. So it would be maybe good to see a response from the banks. But yeah, I think that is what we've seen on our side for the SME specifically. You're talking about that regulations. I definitely think it's got an impact on the SME side. It is harder for them to attract the necessary sort of funding out there due to those type of regulations put in place. It takes a little bit longer. And I think, well, for the corporate clients, it's something that they got big teams dealing with. It is a continuous struggle, and I think that question is maybe more global as well. So South Africa is maybe sort of, they've got necessary systems in place, but as soon as you maybe go cross-border to the wider African discussing the trade agreements, it is quite sort of difficult almost to get all that type of information required. So I think it will definitely have a little bit of a constraint, and it cycles. So we've seen typically that happen before, and then again it gets sort of more streamlined, and the process may be a little bit adjusted, and then it goes better. But in that, it opens obviously opportunities up for maybe sort of like these type of blockchains, more fintech, alternative funding companies to open up, and ESG and DFI play a role in that as well to help that sort of part of the economy.
We've got a couple of minutes left, and I want a part of this, this panel as it ends to have some level of tangible solutions that people can take back home within their teams to discuss, etc. And Hlengiwe, from a Transnet point of view, you talked a little bit about some of the public-private partnerships. Going forward, I mean, I'm going to put you on the spot here. What are you at liberty to tell us in terms of how Transnet is dealing with its current port issues and rail issues?
Yeah, so I mean, most of the things are public knowledge already. I mean, the president and the State of the Nation spoke about the liberalization of our rail network. So we are allowing the private sector now. I think from the 1st of April, we're going to be issuing our slot sale strategy. So where we're saying, we have the infrastructure and maybe we do not have currently the capacity to respond as quick as required to the private sector. So, let's allow the private sector to use our rail network to make sure that we deliver on trade. From the port's perspective, as we're saying, we're getting private sector partners, and not just for the two that are currently in the market, but we're also working very hard to see how we continue to partner, especially with the port in Maputo, for the exports of chrome and magnetite because of the limitations in our port in Richards Bay. And we also have a number of projects where we are looking at the inland terminals, because if you do not facilitate, the capacity in the inland terminals, it will also affect the actual port. So there's a lot of work that we are doing, and we are engaging the private sector partners from a technical perspective, but also from funding perspective, looking at different initiatives of blended financing. I mean, the government set up the infrastructure fund through the DBSA, and we are saying, how do we pull all those resources together to make sure that we fix the issues, because we understand the issues. I mean, the people in the coal sector, we're decrying how they've missed out on the commodity boom in their sector because of the limited capacity from the rail. So we are working hard. We want to take the coal export back to the previous limits.
Hopefully we can reconvene again in the next year to, I suppose, take a pulse in terms of whether the conversations we've had here and some of the things we are hoping to see in the next year or so have materialized. On that note, I'd like to wrap it up here. Thank you so much to my panel for joining us, Memeh, Prieur, of course. Thank you so much, Robert, Bridgett, and Hlengiwe.